Joined right now by one of our Boston Power players, Paul Dion, the smart tax advisor, not just CPA. I love how you always say that you don't just do returns, you save people money, which
Correct.
is awesome.
Absolutely.
And you're an author.
I'm an author.
The Real Estate Investor Tax Guide is one of his books. It's actually why you're here today, is to talk about the real estate investing side. And interestingly enough, there was buzz that the 1031 exchange was going away, but that's not the case.
That's correct. What actually happened is, as we know, when the Congress works, House had one bill, the Senate had another bill, they compromised. The House bill was killing 1031s. And the National Association of Realtors got involved and lobbied and managed to keep the 1031 in place. One of the other things we talked about before this conversation is a lot of people know the buzzword 1031 exchange, and what it really has to do with is that you can sell a property and move the proceeds to another property. Everybody thinks that's all you have to do. The key is there has to be a 1031 accommodator who technically is an independent person, and the money from the sale has to go to that accommodator. You can't hold on to the cash. And then the money is you paid to that, by that accommodator for the next property. And by the way, it can get complicated. You can sell then buy, or you can buy then sell. And there's actually 4 different ways the process can happen, but you need to get that person involved. And the reason I mention that to you is I've had entirely too many times clients who know what a 1031 is come to me and say, I just sold this property, I want to make it a 1031. And I have to tell them, it's already too late.
Yeah, it's so interesting. I mean, following the rules in a 1031 exchange, I actually came across something similar myself, where somebody had sold a property and thought that they were going to jump into a 1031. And oh no, all I have to do is meet the timeline of whatever it is, 90 days, or I'm not even sure, but they didn't realize there's a lot more that goes into it, which is why it's so important to connect with someone like Paul, an attorney, somebody that is able to guide you through the process.
Correct. And there's a lot more complications with a 1031, which we won't get in here, but that's why you should be talking to an attorney and accountant and know what those rules are and know what those timelines we talked about that may come up and could kill the deal if you don't do it right.
Which can save you or cost you a lot of money. Right?
Correct.
On that topic, people who are getting into real estate investing and trying to figure out how to set up their business, what their entity should be, what are your thoughts on that?
Some of that really is more legal than tax, so I'll be careful about that. I don't want to become a lawyer here because I am not one. But a lot of people who are investing in property should seriously talk to an attorney whether they should be setting up at the minimum an LLC to compartmentalize the risk on the property. An LLC in it itself is not going to save you any tax dollars, but if you're dealing with somebody who's doing property flipping, now we're back into some tax issues. And it has to do with the fact that there can be a lot of people assume property flips are all subject to capital gains. Well, depending on how many you do, how often you do them, they may no longer be subject to capital gains and be subject to ordinary income and subject to self-employment tax. So that's when we want to talk to people about whether or not they should be structured differently. We can't get rid of the self-employment tax, but we can minimize it. And that's the big reason you want to be talking to an accountant about how to structure an operating business versus a rental business.
And that can have an impact.
Significant impact.
Yeah, and I think a lot of people out there just go down the path of, I want to be a real estate investor, and think that they just jump into it and don't realize what needs to be set up to do it effectively from a tax standpoint.
Right, and in fact, kind of add to that, if somebody's choosing to be an investor with another company that's involved with doing either property flips or real estate, they should be talking to their accountant again whether they need to own the piece of that business or whether an LLC or a corporation they own needs to own that business. It all has different tax implications and important to know before you act.
What I love about you and your practice, and we've been working together, and you've been a contributor to the show for a long time, is that you're always looking for that bottom line to help people save money. I think a lot of accountants and CPAs out there go through the motion of doing the returns, which is great, but you really are, like you say, the smart tax advisor that's going out and aggressively trying to save somebody money.
Right, and the key is, it's a sad commentary, but it's better than 90 to 95%, and that's a statistic I can't prove. Just prepare returns. Just fill in the blanks. May tell you a couple things at the end of the day that you could have changed on the tax return, but the real answer is getting together with somebody ahead of time and before acting, deciding how to structure your business, how to move forward, make sure that you do certain things. And that's what guys like me try to do in terms of planning proactively ahead of time how we can save those dollars.
Awesome. Great information.
Thank you.
Thanks for stopping by as always. If you want to connect with Paul and his team, check out smarttaxadvisor.com.
That's correct.
You can grab a copy of the book, connect with them directly, and remember we have more tips just like Paul's here, right here on boston.com.